Hey guys, in this video, we're going to cover the basics of hard money and some of its advantages, namely its speed and its ease of use. Let's get started. Hi everyone, this is Nick Petrick. I'm the COO over at Lone Ranger Capital, and today we're going to talk about the basics of hard money. What is hard money? At the end of the day, the hard money loan is just a short-term loan. It's a little bit different than what you're going to find with a bank typically. The banks are going to be for something that's a little more long-term at typically a lower interest rate. So for us, our main advantage is we can go ahead and get the loan closed quickly. That way you can start on your project faster than you would if you were to go with a conventional bank. The trade-offs with that, of course, is that we're going to be a little more expensive than a traditional bank. So that could be anywhere from a bank being in the 4 to 5% range and us typically being about double that. Now, again, we kind of touched on this earlier, but some of our main advantages is our speed. So we can collect less documents from you and get the process completed quickly, as opposed to the bank where, typically you might be sitting around with a couple of bank statements, kind of going through the underwriting process a bit longer. You got to wait for the appraisal. There's a bunch of things that could slow down your project. And at the end of the day, of course, the quicker that you can move on your project, the more projects you can complete, and ultimately the bigger your bottom line is going to be. So our main advantage is to get in there quickly so then you can complete your work quickly. So to talk a little bit about how a hard money loan is advantageous to you, we'll start with some basic terminology of what to look for. So the main thing that you're probably going to look at are going to be the interest rate and the points. We'll start with points first. Points are going to be the fee that the lender charges for the loan. Typically, a point is equal to 1%. So if someone is charging you 2 points, they're charging you 2% of your total loan. So if you're doing a $100,000 loan, 2 points is going to be $2,000. So that's one thing you're definitely going to want to take a look at is how many points is the lender charging you. The second point to take a look at will be the interest rate. So interest is what's charged to the borrower for the use of the loan. So if your rate is going to be 10%, that's going to be a 10% annualized number. So that's not what you're paying necessarily per month, but what you're going to pay for the use of the loan over the year. So one thing to take a look at with that is saying, okay, well, we've got, the lender charging you points, the lender charging you interest. The third thing there is going to be any sort of background fees. So a lot of lenders will charge a lot of junk fees for something like maybe an appraisal, or maybe they're going to have you do a prepayment penalty, something along those lines. Those are things you should definitely take a look at because some lenders will charge those and some won't. So tends to be a little more advantageous to choose a lender that you know is going to be upfront with you on the fees and how much you are going to end up paying at the end of the day. So one of the major things to take a look at when you're shopping for a hard money loan is a few acronyms that you're going to hear often. One of them is LTV, loan to value. That is essentially what the lender is going to give you as opposed to what the value of your property is. So if the property, when it's complete, is going to be worth $100,000, and a lender tells you, oh, I can go up to 70% LTV, they will give you 70% of what the home will be worth when it's complete. In this example, that's $100,000. So 70% of $100,000 is going to be $70,000. That will be ultimately the top end of the loan. So the lender will probably give you less money up front since it's not currently worth its max value. And then as you complete the project, you'll take more and more money and it will eventually grow to a max of $70,000 in this case. Another term that you're going to hear when getting quotes for a hard money loan is ARV. That stands for after repair value. So it's essentially whatever the lender or whomever is underwriting it, could be an appraiser, thinks that the property is going to be worth once it's complete. So ARV is definitely something that you're going to hear often as it's going to determine what loan amount you will ultimately be offered. So there are a few other terms I'd like to share with y'all that are good to know when talking about a hard money loan versus a conventional loan from a bank. The first is how some of these loans will be structured. Not all of a hard money loans will be structured this way, but typically in our projects, we will quote you a total loan amount, and then we'll typically advance a smaller portion upfront. This is to help typically with your acquisition costs. So if you have a loan for $100,000, just to keep our examples consistent, we might advance, say, $40,000 upfront to assist with the purchase of the lot. That would give you a remaining $60K, which is known as a construction holdback, for completions on the project. So that would typically include your construction budget, would typically be very similar to the construction holdback amount. The next point that I'd like to cover will be how interest is calculated. There are two main ways that interest can be calculated on a hard money loan. There is what's known as Dutch interest and what's known as New York interest. We'll start with Dutch interest. Dutch interest is any interest amount that is calculated based on the total loan amount, not necessarily what you've actually borrowed, but the entire loan. So, as in our earlier example with a $100,000 loan, your Dutch interest amount would actually be calculated on the $100,000 amount over the course of the loan, regardless if you've actually borrowed $100,000. So, in our earlier example, we had mentioned you borrowing $40,000 up front. If you were to be charged Dutch interest, you would be paying on that $100,000 amount, even though you haven't borrowed $100,000 yet. New York interest is the inverse. So you will only be charged on money that you've actually used to date. In our example, that would be the $40,000 number. So your payments will be based on that $40,000 number. And if you were to draw that amount up by working through the project, it would then be charged on the weighted average of that new balance. So if you were to take a $10,000 draw, your new balance would be $50,000, and then it would be calculated based on the weighted average of your balance over the course of the month. Another good point there is how your payments are structured. You can either pay what's known as like upfront or in arrears. We typically calculate ours in arrears as it gives us a chance to look back at the month that you've owned the loan and find out what your balances are and charge you based on that. That way, we're not future gazing your payments or what we think you're going to take for a draw. We're charging you purely based on what you've actually drawn over the course of that month. The final point I'd like to touch on is title. It's a very vital part of really any home buying process. So it's not something that people necessarily are super well versed with, whether it's buying a personal home or doing an investment project. Title insurance is typically run by a company who will look over the formal ownership of the property. So they're going to take a look at the whole history of who's owned that particular piece of property. So they will go through the tax records, through ownership records, and make sure that whoever you are buying a home from can actually sell you that home. So they ensure that you have what is known as clear title, meaning that there are no liens, no deficiencies with who owns what. It's extremely helpful when buying any piece of property, not necessarily just a hard money loan, but really any property at all. Typically, a company will handle this. They'll do all the background work for you. Some folks use attorneys that are well versed in this, but in Texas, it's typically handled through a title company. So they'll go through the ownership, make sure everything is looking crystal clear and that there's no confusion on who actually owns that piece of property. Once they're happy with the ownership, they'll give you what's known as a title commitment. And that is their commitment to you, the customer, saying, hey, this project is good to go and you are able to buy it. Once we receive that, we can then draw up our loan docs and get the process started. So to explain a bit more about the nitty-gritty on how we work as a company, I'm going to introduce Lucille Moreno, who's our Vice President of Operations.
Hi there, I'm Lucille. I'm the VP of Operations with Lone Ranger Capital. Now that you know the basics of a hard money loan, I'm going to talk to you a little bit about what questions you should ask any hard money lender. One of them is, what the term should be, or what the loan term is, I should say. So how many months is the life of a loan? For us, we typically do our loans for anywhere between 6 and 12 months. 6 and 9 are more for like the bridge loans, fix and flips. 12 months would be for new construction. There is room for extensions depending on the status of your project. Happy to do that for you. Another good question is, how many points do you charge on the loan? That'll also depend on whether it's fix and flip or new construction, but our points range between 2 and 3 points. As far as what fees we charge, our doc fee is $9.95, our underwriting fee is $225, and our draw fee for each draw request is $150. Those few fees will be taken out up front of your closing, and then throughout the life of the loan, every draw request will be $150. You'll see those fees on your HUD settlement statement, which is going through title. So that's another good question. Does this loan, acquisition have to go through title? Yes, you always want to go through title. It's the most safest thing to do. Another good question is, what is the draw process like? Well, draws are meant to be reimbursements. So post-closing, when you're ready to, start on the project, you'll start on, let's just say, the kitchen. You're going to do the cabinets, you're going to do the countertops, paint, what have you. After you do all that, you turn in your receipts and lien waivers, if any, to the draws department. They'll review all of that. Your first draw request, we will send out an inspector. And then after that, you can upload the photos yourself through an app called Proven Direct, and that shoots directly to our draws department. Once they review, you can have that draw reimbursement within 24 to 48 hours. So it's very quick versus like your typical conventional bank loan. That could take anywhere between 2 to 4 weeks. So that's the very good thing about going through us at Lone Ranger Capital. One good thing to know is what you're responsible for while having a loan with us. You should be responsible for the property insurance. That'll help protect you as the owner of the property, us as the lender. What it is, if this house burns down today and we have a loan on it and you don't have insurance, we're all in a pickle here. So the insurance is really good to have. It's just highly recommended. Also, what you're responsible for would be the property taxes. That is something that needs to be paid. That's another reason why, I say it's very important to go through title, because they're going to make sure all the taxes owed before you had it are paid for by the seller, and then you'll be responsible for the rest up until you sell that property. You're also responsible for interest payments. So the interest payments will be paid to us monthly at the beginning of the month, and that is based on the amount drawn to date only. So if your loan is for $400,000, but you only borrowed $150,000, you're only paying on the $150K. Then with the next month's, due time, if you've taken a draw in between them, let's just say for $20K, well, then now your interest payment's going to be based on the $170. So that's how that works throughout the loan process. A lot of people like to ask, how quick can we close? My answer is always, as soon as we receive what exactly the project is. So tell me the purchase price, tell me the address, tell me how much you're going to put into the home. We can then see what our ARV is. If you agree with the terms, we'll move forward. I'll open title. As soon as title can give me the clear, that means, hey, there's no liens, there's nothing stopping from your client buying the property. We're good to go. Great. We can close within 24 to 48 hours. And the reason why I say that is because, we'll draw up the docs, make sure we have all of your corp docs and insurance in place, all that good stuff. But title will have our docs within that time. You can sign. We'll do the funding, you get your keys, and you can start on your project.
Thanks so much for watching, guys. If you liked what you saw today, go ahead and like this video and subscribe to our channel, and we'll see you on the next one.